Hmm? Hello. I hope two people have joined my live chat. And this is the first chat that I'm doing for ELSS, Equity Linked Saving Schemes. So just put a hi or something so that I know people like you are listening to me, and then we can go ahead with what is ELSS. Am I audible? Can you just put a hi or like any post a question so that I know like how many people have joined. Okay, so today I wanted to do this live chat because year end, the financial year end is approaching, and tax saving, as we all keep. Okay, there's one. The tax saving that we do every year. So by March end, this tax saving has to be done. So just 20 more days that are left for the tax saving to be completed, and that is why I thought this we'll do a live chat for ELSS, equity linked saving schemes, which is basically a mutual fund. And like the best option for investments under section 80C of the income tax act. So good, there are five people who have joined in. This is the first time I'm doing this, so I'm a little new to this. So people, like if you can just put a hi or give a thumbs up or something, I can understand how many of you are there. And if you like can just type in your queries or any specific request that you want to know about ELSs, then I can go forward explaining that. Basically, ELSs scheme allows you to invest up to 1 lakh 50,000 rupees section, you have various options. You have your PPF, you have NPS, the National Pension Scheme. ULIP is one of the options where you can invest. But why I thought of doing this video of ELSS, basically because ELSS is a kind of scheme which gives you that tax saving which all these other instruments offer, but with the least lock-in period, which is just 3 years, right? For PPF, all of you know that the lock-in period is 15 years. For NPS, the lock-in period is up to your retirement, right? So in ELSS, the lock-in period is only 3 years, and you can get a tax saving up to 46,800 rupees if you fall in the highest tax bracket in like if you invest in this ELSS scheme. Now you can either put in a lump sum, or you can invest by way of a SIP, a systematic investment plan, which you can do for a whole year and get the benefit of rupee cost averaging by investing in ELSS. One thing that you should keep in mind is that the funds that you invest in ELSS will have a lock-in of 3 years. You will not be able to withdraw your funds before that lock-in of 3 years is complete. So there is no partial or premature withdrawal as some of the tax saving instruments offer. There is no such facility for your ELSS schemes, right? So once you invest your money, the money is locked in for a period of 3 years, and only after you complete those 3 years, you will be able to withdraw it. Now, how do you invest in an ELSS? If you are new to investing in mutual funds, the first step of investing in an ELSS is by doing your KYC. Now, KYC is know your customer, which is a mandatory requirement if you are new to investing. Hello, Manohar B. Now, this is a mandatory requirement if you are new to investing. So, basically, have your KYC completed and verified, for which you will need your photograph, your PAN card, and your address proof. And once you are done with your KYC, you can go ahead and start investing in any mutual funds, likewise in ELSS. Right now, while choosing ELSS, like there are so many schemes. Each fund house is can have its own ELSS scheme. A fund house can have one ELSS scheme per house, right? So which ELSS scheme should I choose? Which is the best ELSS scheme in the market? Now, have the mutual fund fared. Now, like for example, if you take a PPF account, you know that the lock-in period for a PPF is 15 years. PPF cannot be withdrawn up to 15 years. Premature withdrawal and all is allowed, but 15 years is the lock-in period. Now, if you take that window of 15 years, and if you compare a mutual fund or ELSS scheme of a mutual fund with that period of 15 years, say for example, if you take a DSP tax saver fund. Now, this fund was this fund started in 2006, and if you take a 15-year period till 2021, this fund on an average, the growth scheme of this fund has given returns to the tune of 14%. Now, if you compare it to PPF account for the same maturity period of 15 years, PPF accounts have given somewhere on an average 8% returns, right? So the longer you keep in a ELSS, the better are your returns. Now, normally, even though there is a lock-in period of 3 years, it is expected that for any equity oriented mutual fund scheme, you should have a longer time gap of at least 5 years to see the kind of returns that you expect from it, which are higher and are able to beat inflation. Right now, see, basically what happens in an ELSS is you invest the funds, and 65% of that amount that is invested, or the corpus of the fund, is invested in equity oriented instruments like shares. The remaining part can be invested in fixed interest earning securities by the mutual fund house. So the component of the equity exposure that the mutual fund has is on a upper side. Likewise, the risk factor, being an equity oriented fund, is also high. So the longer you keep money in such a fund, the better it is going to be for your returns, right? Now, if you have heard of okay, I have a question from Mr. Manohar B. What are the tax benefit when investing in a PPF, in a ELSS scheme? Okay, now tax benefit you will get under Section 80C of the Income Tax Act. So up to 1,50,000 rupees you will get is allowed as an investment for tax benefit under Section 80C. Now, as I had told initially when I started this broadcast, that this is the best option for tax saving under that section of 80C of Income Tax Act. Why? Because it offers you greater returns with the least period of investment, which is 3 years, which no other 80C tax saving investment gives. Right? All other tax saving investments have a longer lock-in period of, say, 15 years in case of PPF, or till your retirement in case of NPS. I hope that answers your question, Mr. Manohar. If you have any other question, do let me know, or if you want any clarification, do let me know. Now, I was telling you about Parag Parekh Mutual Fund. Now, this mutual fund has a scheme, Parag Parekh Flexi Cap Fund. Now, few days back, they had stopped taking new investments in that fund. Why? Because they had an exposure in international markets, and SEBI had put a cap of $7 billion would not be possible, and that gap was fast approaching. So Parag Parekh Mutual Fund had stopped taking new investments in their flexi cap fund. What they alternatively suggested investors was, instead of investing in flexi cap fund where they had stopped taking investments, they suggested investors to invest in a ELSS, in an ELSS scheme by that fund house. Why? Because they said, anyway, if you invest in an equity mutual fund, we expect you to hold on to your investments for a longer period of time. So why not get dual benefit of tax deduction as well as better returns by investing in an ELSS rather than a equity oriented scheme? So that is how mutual funds do market ELSS, and as investors, we should take advantage of such schemes. Okay, any other question? Yeah, okay. Do we get assured returns, or do they vary? Okay, now, Mr. Manohar, one thing we should understand here is that this is a mutual fund. It is not a fixed interest earning securities. Again, ELSS schemes invest primarily, majority chunk of your amount goes into stock markets, into equity related instruments, right? So there is an inherent risk involved in these mutual funds, in the sense the returns may vary. The returns vary according to the cyclical turns in the stock market. That is why it is expected that you be invested in these mutual funds for a longer period of time. These are not fixed interest earning securities, but again, as I gave you the example of DSP tax saver fund, which on an average has given returns of 14% over a period of 15 years, as compared to the PPF 8% returns, you can very well understand the kind of returns that you can get from these by investing in these funds. One option that you can think of to reduce the cost of your investments is by investing in these funds through SIP. So at the beginning of the year, if you start an SIP in a ELSS, SIP is a systematic investment plan, right? You invest in these mutual funds through a fixed sum that you can you can give instructions to be debited from your account from a sum as low as rupees 500. So if you start a sip every month, it will help you to rupee cost average your investment. Now what is rupee cost averaging? Basically, rupee cost averaging is when the markets are high, what is going to happen is you will get small amount of lesser amount of units of a mutual fund. Why? Because the markets are high, the nav of the mutual fund is going to be high. When the markets are on the lower side, when the markets are bearish, what is going to happen is that same amount that you invest every month will help you purchase more units when the markets are down and less units when the markets are up. Now what is this going to help you do is it is going to help you average out your cost of investment, which will reflect in better returns that you get from these funds. So one method of investing in an ELSs is to keep on doing SIP on month basis and achieving your yearly tax saving target. I hope that answers your question, Manohar. Right. Now, if anybody has any other question, do let me know. As I told you, ELSS gives you tax saving under Section 80C of the Income Tax Act. So you have till March end to invest in these schemes. So if you have not done so, what you can do is, instead of investing the whole sum, if you are new to ELSS schemes, if you have not invested in ELSS schemes before this, what I suggest is you instead of putting in the whole 1,50,000 in PPF and locking that investment for 15-year period, what you can do is start by investing a chunk of that in ELSS. So divide your 1,50,000 between PPF and ELSS schemes. So you have a fixed interest earning investment, which is for a longer duration, and then you have an investment which is capable of giving you better returns, which is capable of giving you returns higher than the 7.1% that you earn on PPF, and put in a chunk of your money, a small part of your money in ELSS, and see how you get the returns, be comfortable in it, and then you can start off, think of increasing that portion which goes towards ELSS and your PPF. Right. Okay. Kshitij. Hi, Kshitij. Okay, is this like a long-term investment or a short-term investment? What is the lock-in period? Okay, now the lock-in period for ELSs is 3 years, which is the shortest for any investment under Section 80C, right? So one thing you should be clear, this fund has a lock-in period of 3 years. You will not be able to withdraw money before the 3-year lock-in period is over. Even if you want to prematurely withdraw money, that option is not available in ELSS schemes, right? Now if you do a SIP, once the amount, like if you do a SIP say beginning of from April for the next year, so if you invest in April 2022, the lock-in period will get over in April 2025. So the money that you have invested in April 2022, you will be able to withdraw only after April 2025. Likewise, May to May 2025, June 22 to 3 years later. Understood? So lock-in period is 3 years. No withdrawal prior to the completion of the lock-in period. I hope that answers your query, Kshitij. Long-term or short-term investment, one thing I want to tell you, again, I'll repeat it, since this is an equity-oriented scheme, staying in the scheme, staying invested in the scheme for a longer duration of time will help you earn better returns. So normally, typically for any equity oriented scheme, what is expected is you stay put in the investment for a period of 5 years at least, so that you get healthy returns from it. Right. So now, if you are new to mutual funds itself, if you are new to investing in a mutual funds and you have not done so till date, ELSS again will be a good option. Why? Because of the dual advantage that ELSS offers. One, that is of tax saving, and the second one is of bettering your returns over inflation. Now, all of us know where the inflation is headed, right? Yesterday, the US inflation figures were announced and they were at a 40-year high. The US inflation figure stood at somewhere around 7.5%, which is the highest in the last 40 years. In India, also, the inflation has touched 6% and it is set to grow from here, looking at the Russia Ukraine crisis and the oil prices going up, prices of raw materials also going up. So basically the consumer price index is going to rise in the coming months. So what we should aim at is some kind of investments which will give us returns higher than inflation, right? So see, it is always good to have your investments in different investment products. Some of our investments should definitely be in fixed interest earning securities, right? But some of our investments should also be in such products which will help us beat inflation. All of us know what the bank FD rates currently are. The highest rate offered for senior citizen is not more than 6%, right? So putting all your money in a bank FD is not going to help grow your money. If your money is not able to beat inflation, the value of your money is going to reduce over a period of time, right? It is as simple as that. So you should be putting money in such instruments which will help beat inflation, and the value of money is always above what your cost of living is. Any investments in equity and equity oriented schemes will help you get Mr. Manohar, can you just complete your question so that I can just half the question has been typed, I think. So if you complete the whole question, I'll be able to answer it better. Okay. So what I was saying is, see, if you are new to stock markets now, Corona and the lockdowns that all of us experienced, many people turned to stock market trading, right? But half knowledge is always dangerous. If you are not well versed with the see, there are many YouTubers who already has cracked a whip on some stock market trader who was giving stock tips on telegram channels and had a subscription base of 50 lakh people. Can you imagine? And he was giving stock tips, and SEBI has filed cases and shut shop for these people because plain simple daylight scams these people are running, right? So how do you invest in stock market? Only if you know and only if you are sure of investing in stock markets, that is an area for you where you can make where you can get returns higher than inflation. But if you are not well versed with the working of the stock markets, or if you have not experienced the different cyclicals in the stock market, the best way to enter stocks is by investing in mutual funds, right? Okay, I have a question from Mr. Manohar. Will the ongoing war any effect cause effect the okay, there is some. Okay, I'll tell you. See, ongoing war will definitely have an impact on your investments. Why I am saying so? Basically, if you're invested in the stock market cycles are basically they work on emotions. Telling you frankly, company fundamentals, yes, one case where the stock prices will go up and down, but emotions play a very big role in the stock market. play a missions, right? As I told you, this ongoing war is going to have a far-reaching impact. Why? Because of the major trade sanctions that many countries in the world have imposed on Russia. Russia again is like it is one of the major suppliers of oil to the world. Plus, if you see, Russia also exports wheat. It is one of the biggest producers. Russia and Ukraine together produce nearly 30% of the world wheat production. Now, prices of wheat have risen more than 100% since last 1 year, and they are set to rise because of this ongoing crisis, ongoing Russian crisis. Now, it is going to be a good opportunity for a country like India, which is the second largest producer of wheat, with 13% share of the global wheat production. So we have in fact signed contracts to export wheat to the tune of 5 lakh tons. So those agricultural stocks are definitely going to have a positive impact, right? But again, inflation is one worry, not only to the world but in India also, and which is going to bring down the profitability of the companies. It is going to increase prices. We have already started seeing increase in prices of products that we use on a daily basis, say like biscuits. Why? Because transportation is one factor which adds up heavily in the cost of any products. So profitabilities of companies is going to get affected because of this ongoing crisis. I hope I have answered your question, Mr. Manohar. So what I was basically saying is, if you are new to stock markets, or if you are not comfortable directly dealing in the stock markets, then mutual funds are one way in which you can take advantage of the stock markets, but with a reduced risk. Why am I saying so? Again, mutual funds are professionally managed. You are not alone with your own money and making your own decisions. You, along with hundreds of other people, have collated a corpus, and you have assigned management of that corpus on a professional whose only job is to manage our money, right? So mutual fund should be looked upon as a very essential part of your investment portfolio. Correct. Now, I hope I answered your query, Mr. Manohar. This is the first live stream that I'm doing, so I'm quite excited because I'm new to YouTube, and explaining. I'm basically a professor, so explaining something in front of a class of able to see. So please bear with me if you like if I look not comfortable speaking right like this in front of the camera. But I hope to explain the product to you, and I hope I add some value to your investment decisions, right? Okay. Now, as I told you, in an ELSS, the lock-in period is 3 years. So after 3 years, what happens? Do you keep the money as it is, or it is automatically refunded to you by the fund house after the completion of 3 years? Now, here the thing that is to be understood is, even after completion of 3 years, you can still carry on with your investment in an ELSS. So there is no fixed maturity as such. You can have your ELSS as long as you can keep the money in that ELSS scheme as long as you want. After 3 years, you have an option of redeeming the units, redeeming the money that you have invested. Okay, I have another question from CR7. Okay, what are the IPOs to buy in 2022? Okay, now see, basically, the topic of today's live was not about IPOs. I will do another session. I intend to do live sessions every Friday. So maybe next week I will hold a session on IPOs and what IPOs to look forward to. Today, let us focus on ELSs, CR7. If you have any questions on ELSs, I will be happy to help you with it. But since you have asked me this question, and since this is my first live chat, I don't want your question unanswered. See, one IPO that is going to hit the markets and is going to have a loud noise about it is the LIC IPO, right? So maybe next day I will talk about the LIC IPOs. And even though LIC is one of the biggest insurers in the country, we all know LIC policies are sold, rather missold. And is that going to have any impact on the business of LIC in future is also a question that needs to be pondered upon, right? I'm sure all of us have at least one LIC policy of which we do not know any details, and we are still keeping on paying the premiums per year and probably sold by details, and we are still keeping on paying the premiums per year. And of the relative who is a LIC agent, all of us have such policy. I do have one such policy when I started my job after completing my MBA. And I started my job, and the first month in the job, Mazi Mama, one uncle of mine, said that this is the investment that you need to do above all other investments that you do. And that is how I ended up with the LIC policy. And I'm still paying premiums for it after so many years, right? So, right. Okay. So I was telling you basically about redemption of ELSS schemes. So there is no compulsory redemption. You can be invested in the ELSS scheme as long as you want, but after the completion of 3 years, you have an option where you can redeem. So how can you redeem? Either online, say when you, my connection is giving me some trouble. Am I? Which mutual fund house ELSS scheme do you suggest? Okay, now see, basically what you should look at when you decide upon an ELSS scheme is the performance. Now, as I told you, I gave you an example of DSP mutual fund, wherein the mutual fund has given returns close to 14% in a period of 15 years from its inception in 2006, right? SBI tax saver also has given amazing returns. What you should look at while deciding which mutual fund house, this question again by Mr. Manohar, which mutual fund house ELSS scheme do I suggest? One thing you should know, that instead of targeting the highest return scheme, you should target the scheme which has given returns on an average between 12 to 15%, right? While deciding on the mutual fund scheme and the mutual fund house, two three things that you should keep in mind is you should look at returns, the CAGR, compounded annual returns, that the scheme has given. Then you should look at its expense ratio. What are the costs that are getting incurred by the scheme? Now, on an average, somewhere in the range of 1.5% to 2.5% are the costs which are charged on ELSS schemes. What are these costs basically? What is this expense ratio? It consists of cost for managing the funds. Say if you have invested through a mutual fund distributor, then the distributor commission forms part of it. The administrative expenses of the fund house also form part of that expense ratio. So an expense ratio from 1.5% to 2.5% is somewhere that you should be looking at while investing in a mutual fund. So you should look at the returns, the expense ratio, who the fund manager is, who is the person who is managing those funds, what is his track record, right? How has he performed in the various in the past, or the what history has he of mutual fund performance. And again, the fund house also matters a lot, in the sense, now, if you there are many websites like Money Control and Clear Tax, and there are so many websites, right, where you can find out the performance of the mutual fund. Now, all of us know that SBI mutual fund is the largest mutual fund house in the country, followed by HDFC, ICICI. So zero in on these 4 5 top mutual fund houses, and uh, you can decide by comparing their returns. But not only returns, as I told you, compare their expense ratio, compare the fund manager and his performance, and compare how the scheme has performed in various cycles of the market. As like, say, when I told you this example of DSP faced that 2008 market fall. It also faced that 2020 COVID market fall, and a 15-year span is giving you, with two major market falls, that 15-year span is giving you a return of 14%, right? So that scheme, which was incepted in 2006 at 10% NAV, today has a NAV of 75 rupees. And when the market was at its peak, say at 62,000 levels, the NAV of this DSP tax saver fund had touched 85 rupees, right? So over a period, what are the returns? You can get these figures from any business website, and comparing them will help you zero in on the mutual fund scheme, on the fund house whose ELSs you can invest in, right? But as I told you, look at the top 4 5 mutual fund houses. Why? Because they have a good track record. Here I want to stress why investing in the top 4 5 mutual fund houses is necessary, and what you should look at. Go to the websites of the mutual funds. Now, one example that I want to give you here is, Navi is a new mutual fund which is launched by Sachin Bansal. Now, this person, who was the founder of Flipkart, has started this new mutual fund, Navi, right? And very they have come up with the ETFs, and which are specifically focused on the US stock markets. But if you visit their website, there is a statutory declaration which is mandatory as per SEBI rules. Now, their website doesn't even have that statutory declaration. Now, not that it makes much of a difference, but if you are in the field of investing, and if you want people to invest your money with you have to work within the time, within the legal framework and rules and regulations laid down by the authority, by the regulatory authority, which is SEBI. Now, like, Navi and the ETFs that they have with the lowest of expense ratio, right? Like, can seem as a attractive option of investment, but these things also cannot be ignored. Tomorrow, if you have a problem while dealing with the mutual fund, something like what happened with Franklin Templeton, and you have to go back to the regulator, then there has to be a recourse, right? So if the fund house is not working within the regulatory framework, a big question mark on the on whether you should invest in such a fund house, right? Okay, there is another question. Will a mutual fund advisor help? Most definitely a mutual fund advisor helps. Why am I saying this? Because if you are new, you do you know, Manohar, there are around 45 registered mutual fund houses in the country, and upwards of 2,500 mutual fund schemes that are registered in India. Right now, which scheme is good for you? Which scheme is going to help you achieve your wealth creation target is a very confusing task if you keep on going through the material available for the 2,500 schemes. Here a mutual fund advisor comes in handy, in the sense, an investment advisor not only tells you a mutual fund that is good for you, but he will help you jot down your overall portfolio, depending on your age, depending on the liabilities that you have, depending on your risk taking ability, and the time frame that you have in mind. So all these matter when you are to think of the kind of scheme that you want to invest in. So mutual fund advisor, yes, very very important if you are new to this. And because he will show you the right path. Again, we like many a times it so happens that mutual fund advisors suggest you funds which offer you the which offer them rather the highest commission rates. So like check with your friends, check with your family. If you want any help with investing, please message me, I will help you for no fees. Correct. So see, a known mutual fund advisor is always and always helpful. So how long has he been in business? What does the market say about him? Yeah, is he trustworthy? So check out with your friends and family and then approach a mutual fund advisor. Correct. So yes, advisor is definitely going to help you make the right decision when it comes to mutual fund investing. Explain about bitcoins. Okay, CR7, let us today focus on ELSs. Let us today focus on tax saving mutual fund scheme, right? This is the only mutual fund scheme which gives this option of tax saving. One thing that I want to tell you about ELSs is, say, when you redeem these funds, you should know that after the 3 year lock in period is over, there is a long term capital gains tax which is attracted on any benefit that you earn, any returns that you earn above 1 lakh rupees a year. Okay, so this long term capital gains tax is a 10% tax that will be charged for any profit that you make over and above a 1 lakh per year limit, which is set by the income tax department. So that is also one thing that you should keep in mind. So, like PPF, which is a exempt investment, here some taxability is in place, which you should be aware of. CR7 will have a another session for bitcoins. Yes, and IPOs. Please bear. Okay, anyone has any other question regarding ELSS, or how you want to how you can invest in ELSS, or anything? So do we end this live stream? यस, म्यूचुअल फंड सही है। CR7 म्यूचुअल फंड बिल्कुल सही है। Why am I saying this? Why am I stressing this? Why? Because there are two, three, four advantages that a mutual fund gives you. See, on in our daily lives, we are not able to track what is happening in the market, and what say there are some decisions taken by the US Treasury which impact our market. We say, like for example, oil. US banned oil a few days back, right? And oil hit $120 a barrel, and we had elections over here, so the oil prices were kept in check. But now that the elections are over, might be the case that we will have to face some higher oil prices. uh, People were switching or thinking of switching to electric vehicles, but again, nickel, which is one of the important components of the lithium ion batteries used in electric vehicles, the cost of nickel, the prices of nickel have risen 200% in the last 1 year. Russia again is one of a major supplier of nickel to the world. Now all this is going to impact EVs, auto car companies, uh, various industries, right? So on a daily basis, keeping track of such news is not possible. So instead of you individually following news and the impact various things that are happening in the environment on the decisions that we make in our investments, there is a limitation for us individually. So better take professional advice, better go in a cluster, you, me, hundreds of other small investors who collate their funds, and then take advantage of a fund house who is offering their services, professional services, for a fee. Nothing is free here, right? So take advantage of a fund house and earn returns, because there is a set team, right? Every mutual fund house has a research team which does the research work, and then decisions are taken to the advantage, to be real with the particular scheme that is being offered, and to the advantage of the investors. So yes, investment in mutual fund बिल्कुल सही है. Right. If you don't have any other questions, and if you think I have told you enough about ELSs, do we end this live stream? Just give me a thumbs up or something, or ask any questions if you have. And meet me again next Friday. Let me know if you want any particular topic to be explained. I basically will help you with mutual funds, will help you. With your insurance queries, and generally what is happening in the market, right? So let me know if you want me to cover any topic, and we will talk about it next Friday in our live stream. I intend to do this every Friday at 9 p.m. So put me a message if you can't think of any right now. Put me a message later, and I'll see to it that we take up the topic next Friday. Thank you, Mr. Manohar. Thank you. I think we'll end this stream now, and have a good weekend. Subscribe to my channel. I'm very new to all this, so telling people to subscribe to my channel is something that doesn't come naturally to me. So please do subscribe to my channel. Have a look at my videos. I'm bettering myself every day in front of the camera, and I hope to add value with my videos to your investment journey. So follow me, and happy investing. Good night.